General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
And knock out Thursday's work. Today's the 12th. Choppy day. Being classified as expansion, no. It's an engaged day. Medium confidence. Everything's pretty much confirmed. Anchor point confirmed Tuesday. It's playing out. And we're getting expansion. And we hit terminus. We was targeting 50% of that daily candle. So tomorrow is pretty much another day. But it's no days off. But the weekly delivery is pretty much done. Let's go over here. So aim session went straight to the target. And we got the flat bottom. Ended up being the last draw. It's a perfect picture. Classic delivery. London took Asia high and created high today. And New York finished the move. Let's look at the H1. So we're kind of in the gap now. unlock this and see if we put a body through it, or did we just wick it? Okay. Let's take off this 50%. Don't need that no more. Honestly, this looks like accumulation. I think we could run this high before we even come back down. It's bearish. FUG. Hold on, that's purple. Red. Retracements. We honestly don't even need to come up there because we kind of handle business here. We need to get above. So I'm really watching this up candle. I don't think it's the order block, but I think it is accumulation. And since it's accumulation, I think we should sweep both sides of it. See this? We swept this, but we came back here. Breaking the close above here, then I target here. Sell side, don't look bearish. All the selling in the world, all the threats from the dude saying market ain't going nowhere. So it needs an event. Also note here is 200. So we can really chop. I don't think SPY's close to his 200 yet. Something like this. Yeah, go this way. Still thinking lower prices. But from where price is, where price is now, we should look for the buy to sell. Daily. Okay, put bodies through there. That gap is funny looking. I think at least open price makes sense to me. That's bold because Friday is usually a small range day. Monday price target. See if this one's cleaner. Not really. Nasdaq fell harder, and it's more volume in SPY, so it's more incentive to data smash people trading SPY by consolidation. Slower day, slower delivery. SPX 500. It's more choppy. And the range is smaller. Let's go here. Hmm. Hmm. Is the H1 looking like this? Looks terrible, huh? It looks like engineered liquidity, especially. Hold on, wait. New York AM session. We visit that level. Accumulation range. And sweep both sides. Yeah. Taking that. That's an ugly range. Just these two candles. This high to this low. So really it's this high. Let me swept. Take this off. Here it is. That's what I want swept. And it's a good spot for sales. I like that spot for sales. Let's go here for the daily. Thinking placements and lower prices to end the week. Friday. No, it's not really. Framework. Yep. Hit the target. Comfortable. No trading. Process. We'll watch for tomorrow. Base hits. All right. That's that on that. Y'all have a good day. Peace.